Assalamualaikum, Dr. Farha. Our group presentation today is entitled Risk in Green Finance and Takaful as a Solution. Our group is presented by Mohamad Hafidz, myself, Milanie, and also Harmanizam. Our presentation today will cover various areas from green finance and its importance. What is Takaful? Islamic green finance, concept of risk in finance. We'll also cover on the risk management in Takaful, Qatar Islamic Bank's green mortgage, electric vehicle financing, and we'll conclude our presentation with conclusion and some recommendations. Today, we embark on a journey to explore the intersection of finance and environmental sustainability. Our focus is on financial activities that positively impact our planet, aligning with the principles of sustainable development. Let's start by defining green finance. This term encompasses financial activities that actively contribute to environmental sustainability. We are talking about initiatives that aim to reduce greenhouse gas emissions, enhance energy efficiency, promote renewable energy, conserve natural resources, and adapt to the impacts of climate change. As we navigate the world of green finance, it's crucial to understand the key instruments driving change, from innovative tools like Green Sukuk to funds dedicated explicitly to sustainable projects, and the dynamic landscape of green stocks and indexes. These instruments play a pivotal role in shaping a sustainable future. Now, let us introduce the key players in the realm of green finance. Banks, Takaful operators, pension funds, corporations, and governments, and also multilateral institutions. Each of these participants contribute in unique ways to the financing of projects and businesses that prioritize and cultivate environment-friendly practices. We'll look into how corporations are taking up the mantle of sustainability, integrating eco-friendly practices into their daily operations. Simultaneously, we'll explore how governments are driving initiatives to create an environment conducive to sustainable development. Zooming out to a global perspective, multilateral institutions are critical players in the green finance landscape. Their collaborative efforts and support are instrumental in fostering international cooperation for a sustainable future. Why does green finance matter? The benefits extend far beyond financial gains. Embracing green finance leads to a positive impact on the environment, aligning seamlessly with the principle of sustainable development. It's a win-win for both financial portfolio and our planet. Let's reflect on the power that lies within green finance. It's not just investments, it's a commitment to a sustainable, resilient future. As we go along in this presentation, we encourage everyone to consider how we can contribute to this vital movement. Let's talk about why green finance is not just important but essential. Imagine our financial investments as seeds we plant today, which will grow into the future we live tomorrow. Green finance ensures that these seeds will bloom into a healthier environment and a robust economy. By focusing on green finance, we do four key things: boost long term success. When we invest in green finance, we are not just thinking about today's profit, we are improving the health and lifespan of our financial assets. Imagine a world where your investment also work to ensure there's clean air and water for generations to come. That's the goal of green finance. Eco-friendly practices is all about backing business practices that do less harm to our planet. This means supporting companies that cut down on pollution or waste and help in the big shift toward an economy that values the earth as much as earnings. Fight climate change with finance. Our money can be a powerful tool against climate change. By investing in green finance, we are helping to fund the technologies and innovations that tackle environment challenges, ensuring that our economic growth doesn't come at the cost of our planet. Protect our economy from climate risk. The financial sector, like any other sector, is vulnerable to climate risk, like extreme weather or new environmental laws. Green finance helps reduce this risk, making sure that the economy is resilient in the face of these challenges. What is Islamic green finance? Islamic green finance refers to the application of Islamic finance principle and practices to support environmentally friendly, sustainable projects and initiatives. It involves the use of Sharia compliant financial instrument and mechanism to fund projects that promote environmental sustainability such as renewable energy, energy efficiency, and sustainable agriculture. Islamic green finance is based on the principle of social responsibility, ethical investment, and sustainable development, which are central to Islamic finance. It aligns with the United Nations Sustainable Development Goals and support the transition to a low carbon, sustainable economy. Islamic green finance is gaining momentum globally with the issuance of green sukuk and the establishment of green finance initiatives by Islamic financial institutions. It offers a unique approach to sustainable finance that is grounded in Islamic principles and values, promoting social and environmental responsibility while generating financial returns. So, what is Takaful? Takaful is shared responsibility. At its core, Takaful is a system based on mutual cooperation or tabaruk, responsibility, protection, and assistance between groups of participants. These participants contribute funds to a common pool, which is used to support one another against specific losses or damages. Takaful is in alignment with Islamic law. It stands out because it aligns with Islamic Sharia law, avoiding interest or riba, uncertainty, garar, and gambling, maisir, which are all elements that are prohibited in Islamic finance. Instead, it operates on the basis of shared risk and mutual assistance. The role of the operator, it has management and oversight. A takaful operator manages the fund, but unlike conventional insurance, the operator does not own the fund. The participants are the actual owners, with the operator earning a fee for their services. Special considerations according to Allied Market Research, the global takaful insurance market was valued at $24.85 billion in 2020 and is projected to reach $97.17 billion by 2030, growing at a compound annual growth rate of 14.6% to from 2021 to 2030. Now I pass the next slide to Harmanizam for him to continue the presentation. Off to you, Nizam.
Thank you, Melanie. I will take over. So, I will talk about the concept of risk in finance. There are four pillars of risk in finance, which are market risk, credit risk, operational risk, and liquidity risk. About market risk is actually about the risk of losses due to changes in the market prices, such as fluctuation of interest rates, foreign exchange, and stock prices. Credit risk is about the losses due to the failure of the borrower to repay the debts and obligation. This includes default of bonds, loans, and other credit instruments. How about the operational risk? Operational risk is the risk of losses due to internal failure, such as system failure, system malfunction, which also includes with human error and any technological failure. Liquidity risk is more on the bank not able to meet the financial obligations due to the lack of availability of funds. Now we are moving to the risk in green finance. What are the risks in green finance? There are a number of risks associated with green finance, whether known or unknown, and always part of the assessment in granting the green finance facility, such as deforestation, the low return, sea level rise, even the governance, operation failure. These are some of the known and unknown risks that green finance is having. With all the risks associated with green finance, we could find Takaful as one of the solutions. Technically, any green finance risk that can be quantified statistically can be covered under the Takaful. However, it is up to the risk appetite of the and innovation of the Takaful operator to provide and explore the risk. We look into some example: sustainability, new technology risk. Example is Islamic finance Islamic Bank financed a new upgraded model of wind turbine that can harness more and efficient energy. So how Takaful can play a role here? Takaful can compensate the cost of repairing the new wind turbine upon mechanical failure of the turbine. How about food security, loss of income, flood and drought? We give example, Islamic Bank provide financing to SME company to farm a cornfield. The revenue from the farming is to pay for the financing. Takaful can provide coverage on the loss of income due to flood or drought. The SME company will have higher chances to survive in disaster and continue paying installment to the bank due to the Takaful coverage. We look into the governance or security breach. Islamic Bank collects deposit from customers as part of the assets to provide financing. The deposit is part of the bank's obligations for the safety and customers' accessibility. How Takaful can play a role? So the damages from the cyber attack can be covered by Takaful by indemnifying the affected customers and cover the rectification costs incurred by the Islamic Bank. Now we will talk about the risk management in Takaful. Risk management is a critical aspect of Takaful operation, and it is based on the principle of mutual cooperation and shared responsibility among the participants. There are five items that we want to highlight here: risk assessment, risk mitigation, contractual frameworks, due diligence, and monitoring and reporting. Risk assessment. This involves identifying and analyzing the various risks associated with Takaful operators, such as underwriting risk, investment risk, and operation risk. Risk mitigation. One common approach is risk diversification, which involves spreading the investment across different sectors and asset classes to reduce the exposure to any single risk factors. This strategy helps to minimize the impact of any potential losses. The third one, the contractual framework. This include developing clear and comprehensive agreement between different stakeholders involved in Takapul operation. This agreement outline the responsibilities, liabilities, and dispute resolution mechanism, providing a framework for an effective risk management. Due diligence, thorough assessment of financial viability, underwriting standards, investment policies, and compliance with the regulatory standards. And the last one is monitoring and reporting. Takaful operator closely monitor the performance of their operation, ensuring that they adhere to the ethical and regulatory standards. Regulatory reporting allows for the timely identification of any emerging risk and deviation from the plan objective. I will pass to my friend Hafiz to continue the presentation. Thank you.
Thank you, Harmanizam. I will continue on the case study of successful implementation of Islamic green finance and Takaful that provide concrete example of how these concepts can be effectively applied to promote sustainable development while adhering to Islamic principles. The first case study that we want to share here is about Qatar Islamic Bank Green Mortgage. In 2023, Qatar Islamic Bank (QIB) launched a green mortgage product that provides financing for energy-efficient homes. The product offers reduced profit rates for homes that meet specific energy efficiency criteria, such as LEED certifications or Energy Star rating. KIB is working with Taman Islamic Insurance Company, Bima Takaful, to provide the Takaful coverage on the group credit line Takaful to indemnify the certificate's holder against natural and permanent accidental deaths. Okay, the second case study of Islamic Green Finance and Takafuls is about district vehicle financing by Maybank Groups. In early 2023, the Maybank Group launched integrated automobile finance solutions in Malaysia, specifically catering to customers interested in electric vehicles (EVs) and hybrid vehicles. The solutions encompasses a range of facets pertaining to the ownership of electric vehicles (EV) or hybrid vehicles. Later the same year, Etika Takaful, a subsidiary of Maybank Groups, announced to become the first Takaful operator to provide coverage on the EV home charger. The coverage is provide complementary extensions to an Etika private automobile insurance or certificate specifically for recently registered battery power electric vehicles (BEV) or plug-in hybrid vehicle (PHEV). Okay, what we are can conclude here. Throughout these presentations, we have explored the benefits and challenge of implementing Islamic finance and takaful. We have seen the takaful, with the basis of risk sharing and mutual cooperations, play crucial roles in mitigating risk in Islamic green finance. By pooling contribution from participants and diversifying risk, takaful offers stability and financial protection in the face of unforeseen events or losses. Islamic Green Finance and Takaful offer compelling solution for addressing risks in sustainable development and ethical finance. By integrating principles of shared responsibility, sharing, and ethical conduct, these concepts provide a unique approach to managing risks while promoting sustainability and adhering to Islamic principles. Looking ahead, the future trend and outlook for Islamic finance and takaful are promising. With the increasing demand of ethical finance and sustainability, we can expect continued growth and innovation in these areas. The generation of products and services collaborating among stakeholders and regulatory support will be instrumental in shaping the future of Islamic green finance and takaful. Takaful Islamic Green Finance and Takaful provide a robust framework for managing risk in sustainable developments. By embracing principle of shared responsibility, sharing, ethical conduct, this concept offer a pathway to promote sustainability while adhering to Islamic principles. Okay, to future enhance the integration of Islamic green finance and takaful and promote sustainable finance, the following recommendation can be considered. Is for here. Number one, strengthen regulatory framework. The framework should provide clear guided guidelines, standard and criteria for green investments, risk management, and ethical conduct. By establishing robust regulatory frameworks, transparency and investor confidence can be increased, attracting more participants to engage in Islamic refinance and takafuls. Number two, facilitate standardizations. Efforts should be made to establish common definitions, criteria, and guidelines for green investment, risk assessment methodologies, and formal measurements. Standardization will enhance transparency, comparability, and market confidence, facilitating cross-border transactions and attracting international investors. Number three, encourage research and development. Continued research and development efforts are needed to advance the field of Islamic green finance and takaful. Research institutions, academia, and industry players should invest in research projects that explore innovative financial products, risk management techniques, and sustainable investment strategies. Number four, promote awareness and education. Educational program, workshop, and awareness campaign should be conducted to educate individual businesses and investors about the benefits, principle, and practice of Islamic green finance and takaful. This will help create a knowledgeable pool of participants who can make informed decisions and actively contribute to the growth of these concepts. Okay, thank you all for your times, attention, and thoughtful engagements during our online presentations. Thanks again. Assalamualaikum warahmatullahi wabarakatuh.